Well, hello members, LA here. This is January 22nd review. It's the 24th. And as we look at this last week, what do? We go back the other way. This market, it just won't give it up. Well, last week we were looking at the first bearish ABCD down since October of 2021. 2020. And this week, they just force money into those big cap technology stocks, and they take everything to the upside. The only thing down was the dollar. So if you remember last week, we were talking about this ABCD down. We're saying, hey, well, maybe something's happening. And of course, we get to this week, and what's happening? Well, that little ABCD down sees a big spike back to the upside, break a swing point. Now you're doing a potential ABCD up, 39.17 the target if it extends to it. And if you look at the setup here, you actually have a bullish retest regen possibly setting up as well. Usually those get bought. You got a gap up area. I suspect that's probably where it will be bought if it's going to be. If I think about the market here in a broader sense, right, it really seems to be focused on three things, and they're the three kind of pillars that are holding this market up and pushing it higher. One is the Fed, that large S that's there in the Fed, the fiscal policy, large S as well, in this whole idea that the vaccinations are going to solve the pandemic spread. The prevailing view is that's going to happen, right? These three things are going to happen, and unless and until something comes in to break these downs, and I suspect the latter one is where you'll see that if it happens anytime soon, this market's going to hold and try to move higher. That just seems to be the way things are. Now, it could be that we'll see fiscal issues, and what I'm talking about is maybe this administration is not going to be able to do this fiscal policy, large S. It may be that comes into question as well. I suspect the Federal Reserve, that's not going to go away. It's going to be one of these two. If we pull this back to a weekly and look at it, and we go back to March and we see that big spike off the March lows, you got to have about a 10-week push to where we got consolidation. After that, it was a 9-week push to where you got consolidation, retrace. We're on 11 weeks and counting on this move up. Now, the difference here is that these moves up are coming with little smaller pushes, right? You got one big push and then a bunch of little ones, whereas here you have some larger ones. But of course, that followed the big spike down. So this one looks a lot like this. 11 weeks and counting. Again, it's just reemphasizing what we emphasized last week, and that is that we're kind of late in this move, or at least we think we're late in this move, right? The other thing I noticed recently is that the last 2 Fridays we've seen some decent sell-offs, and I don't know if this is a pattern that's emerging. It's almost as if all the buyers want to take and buy and then sell it at the end of the week. And so everything you make intra-week, you try to take those profits before they push back down. And potentially, something goes bad over the weekend, I guess. But we'll see if this develops. But so far, it looks like there's a little pattern starting to take place here. As I kind of mentioned at the front there, last week, what we saw was rotation, in particular into the big cap technology. They were negative coming into the week on the year, and they get a big push back to the upside. You saw all those things that have been pushing earlier, like energy and financials. They get the selling, and so what is this? This is that same thing we've talked about before, where you rotate, right? You stay in something that makes money, you flip out of that, you put your money somewhere else. The profits rotate into something that's relatively cheap comparatively, and you just keep doing that over and over again until you can't do it anymore. So if we talk about a bottom line here, the buyers have overwhelmed the sellers one more time. And remember, to typically get a turn It takes a while. You got to get the speculators to be burned a few times before they're going to stop. Last week we saw the first selling pressure in a long time, but it doesn't really mean anything unless you get it again. So in other words, unless we see another ABCD set up to the downside, some sort of bearish ABCD that completes, and we get some sort of a topping pattern as a result, right? It doesn't mean anything. And we've been over this many times, and so we saw the first indications of it. If we were to see that bullish retest regen, for example, this week fail on the daily, that would be a big deal. Those are the sorts of things you have to look for to say, hey, something really is starting to take place. So the beginnings are there, but if the sellers are going to take control, you're going to have to see more of that start to take place. Until that, it just simply doesn't matter, right? The buyers continue to exhibit the control over price. And until we get multiple cases where they fail to do that and the sellers actually start to take control, then it simply doesn't matter. I wanted to put a new slide in here this week. It's kind of a personal slide. I've been doing this a long time. I was an engineer for a long time. And financial, trading was always something I wanted to do, but as an engineer and as family obligations and so forth, I couldn't really do that on a full-time basis, so I did it on a part-time basis. The result was that I worked all the time, 6-7 days a week, 12, 16 hours a day on average. And that went on for a very long time. My family life suffered. And so about a year and a half ago, I began to minimize that work. I began to cut it down. I got it down to about 4 to 6 hours a day, maybe 4 or 5 days a week on average. And my family life improved, right? And I had more time for my beautiful wife, my kids, and to do things that I wanted to do that I primarily, or I couldn't do, primarily reading a lot more. And, again began to, quote unquote, enjoy, the roses a little bit. Now I'm kind of at that stage where I'm trying to improve my work efficiencies, and I'm trying to look at how I can improve my trading as well as yours more. And the way that I'm looking at doing that, I've kind of detailed down here. And the idea is that, to make money, you got to find things to do that have high probabilities, and then you've got to manage, get the entries and manage those trades. A lot of that management I'm showing you with the trades that we do on TA Today's site. But there are a lot of other ideas that you could pursue if you wanted to, depending on how active or inactive you are. And so what I want to do is create more of these trading ideas for both myself and for you. And I want to do that and share these ideas through you. And the way I'm thinking about doing is through watch list. One of the things I've done over the last few months is I've worked with one of the members on a particular type of trade setup that he was looking for. And in doing that, I realized that I can generate and use the watch list as a means to communicate to him or to anyone that's a member. And so what I do basically is I do whatever these queries are, in the database to find the situations that we're looking for. And then I use the watch list and an automatic population of a particular watch list to facilitate the communicating of those trading ideas. And for him, I've been doing this gap up, break of swing points. And so I want to take a minute here to show you what it is I'm talking about. So if I come into the watch list, and if I go down to, and in my case it's not going to show as shared, I'll go down to the shared section. Down here in the shared section you see LA registered demo, right? Well, there's also on your watch list, you're going to see LA shared, and it's going to be this, gap down and gap up. And so they're auto-generated, and if I go into it and I pull, and this is from 122, so this was Friday's gap up list, it tells you what the criterion are, right? Throws that into the very first one, and then anything that meets that criterion for that particular day shows up. And so you can, like any other watch list, you can click on this, get the 3 charts and the trading cube and everything, and you can flip through all of these automatically, etc. This has been, something useful that I've found that as a way to communicate. And these are all the gap downs, and there's quite a few of them. I hadn't looked at it yet. Most of them ETFs, and probably a number of those are what do you call it? The leveraged negative ones. But the idea here is that there is, I should say, a way to use watch list automation to share trading ideas with you. And so if I go back here, the ones I just showed you are these, but we could also do like short squeeze candidates. We could look at any stock that had, some sort of a high short interest, maybe 15% or so. That's coming up to a swing point high, for example, right? So we got a swing point high, and this has a lot of short interest, and we're coming right up to it, right? Price is coming up, and it's within the ATR of it, right? So in other words, it could hit it and get over it. What is that case? Well, that case is a squeeze, right? So if you have a high short interest and this thing starts to break out, whoever short this thing, some number of them are going to close those positions. And so this could be a nice candidate for short-term type trading, even shorter term that I can probably actively manage in the TA Today portfolio. But there's others too. I mean, we could do multiple swing point, multiple time frame breakouts. These types of candidates for communicating trading ideas is something we could write code for, or I plan to write code for, that I can share with you. And so I'm going to start doing this more so. I just showed you one that you can use now, but I will continue to develop these and introduce them, and this is something that I'm working on to improve my trading as well as hopefully improve yours. Trading plan, well, it's up almost 2.25 on the year, so it's doing well, and that's with a small set of positions, small footprint. We're still waiting on that decent sized retrace. We haven't got it yet, but I suspect we will at some point. Once we get this, we're going to buy in more, and we're going to do that because on the weekly basis, as we showed last week, we could get a 6 or 8% pullback in this market and still be a screaming buy, and we want to use our small footprint to take, whenever that happens, to take that and buy into it. If we look at what we have in the portfolio, the ideal is to take, if we're going to add now before this happens, is to take winning positions and on retrace add to those. And then if there are good new positions, then we can take those. I just put an order in this morning when I was reviewing the portfolio. I review it once a week, every Sunday morning. And when I was looking at it, the DBA is starting to set up again. And there's a hot link here. You can review that or just go over to the monitor screen and review it there. But portfolio is doing well, and we're looking to try and take advantage of any weakness and buy into this market more if that comes about. Looking at the fundamentals and politicals, the earnings really haven't proven to be negative. What we're seeing is you're seeing stocks trade up, right? Earnings come out, the stock trades sideways to down off those earnings, but no big plunges or anything. So earnings really, if you think about it, have been a positive. Last week, fundamentally, Bank of Japan, the ECB, they didn't really announce anything new there, and the Fed's unlikely to do anything new, but they're still supporting the market, so that's a plus as well. So you got earnings a plus, you got the Fed a plus. High frequency data, things like sales that based on internet sales, things like that. We're seeing some weakness coming back in there, not only here but around the world. This could turn out to be a negative, but so far in the less high frequency data, PMIs, things like that we're not seeing it. There was no outliers last week. Nothing. Actually, this was from the prior week. I was going to say no outliers, and I forgot to write in the correct stuff. So, but there was nothing special last week in terms of economic data, and I actually got the GDP numbers wrong. They weren't due last week; they're due this week. So the big things this week: Fed numbers, or the Fed speak, and the GDP numbers. So we'll have to watch those. Those are the two that could cause something to take place. Last week, better than expected, kind of like last year. And if I look at this week and ask myself, where's this market going to go? I think best case is it heads on up towards that 39.12 or 17, I guess it is, 39.17 ABCD structure projection. Worst case, I think if we saw a worst case, that would be a break of this swing point highs low, which would be a retest region failure. And that's what I'm showing here at the end of the week. I think that would be worst case. I think the more likely case is you're going to, because we're coming back so fast, I think we're going to do a full test of this and then start to turn back up. It actually could turn positive by the end of the week. I think a lot of that depends on what the GDP numbers look like and what the Fed says. All right, folks, that's it this week. Have yourself a safe one. Take care. I'll see you next time.